Welcome back, everyone. Today we are joined by OSR Holdings, a hub and spoke healthcare company focused on advancing biomedical innovations in health and wellness. OSR Holdings trades on the NASDAQ under the symbol OSRH. The company last week announced a differentiating licensing transaction involving its immunotherapy asset, VXM01, that management believes significantly de-risks development while preserving long-term upside. Joining us today is Tim Smith, who will walk us through the details. Welcome, Tim. We're looking forward to the update.
Good afternoon, and thank you, Anna. It's great to be back here again, and thank you for the introduction. I'm Tim Smith, Head of Investor Relations at OSR Holdings. We've had a significant few days at the company, and I appreciate the opportunity to walk you through what we believe is a transformative transaction in OSR Holdings history. Before I begin, the forward-looking statement disclaimer on this slide applies to everything I'm about to share. Please review our most recent 10K and SEC filings for a full description of risk factors. With that noted, let's get into it. Let me start with the asset itself, because everything else flows from there. VXM01 is an oral immunotherapy developed by Vaxim AG, our wholly owned Swiss subsidiary. Its mechanism is to stimulate immune response against tumoral neovasculature and VEGFR2 expressing cancer cells. Unlike competing therapeutics, which are administered intravenously, VXM01 is orally administered, and that has real implications for cost of care, global accessibility, and commercial scalability. We have clinical data for GBM and pancreatic cancer, which are among the most aggressive and difficult to treat malignancies, both associated with extremely poor survival outcomes and significant unmet medical need. In pancreatic cancer, phase 1 trial data showed clean tolerability, no dose-limiting toxicities, and VEGFR2 specific T-cell activation in the majority of treated patients. In glioblastoma, we completed a phase 2A trial in combination with a PD-L1 inhibitor. The combination was well tolerated with early efficacy signals, and a phase 2B3 ready adaptive trial design is in place. And beyond those two indications, the underlying platform has applicability across any solid tumor where targeted cytotoxicity is a therapeutic strategy. Now onto the deal we announced last week. On April 29th, we executed a definitive global exclusive license agreement with BCM Europe AG, our largest shareholder. This is for the worldwide development, commercialization, and sub-licensing of VXM01. And here's the architecture. At a high level, we can look at OSR Holdings and Vaxim together as a licensor. And BCM Europe AG, or BCME, is the licensee and has the aim of sub-licensing to a global pharma partner. To break it down further, there are 4 pillars to this transaction. Firstly, VXM01's intellectual property transfers from Vaxim to OSR Holdings under a $30 million asset purchase agreement. This puts all the economics at the parent level rather than being contained at the subsidiary. Secondly, BCME secures the exclusive global license for VXM01. In return, OSR Holdings receives up to $815 million in milestone payments, along with all future residual royalties after the Delta recovery. Next, and critically, BCME has pledged its entire unencumbered shares in OSR Holdings as hard collateral, backing those milestone obligations. So it has real skin in the game and compelling incentives to see VXM01 progress clinically. Finally, OSR Holdings has a put option to sell $15 million of common shares to BCME at $10 per share 6 months from now, which will provide capital flexibility. So why this structure? Well, this transaction is purpose-built to transfer a large part of the development risk away from OSR Holdings while still preserving long-term upside participation. This is a specialty finance licensing model, an increasing trend for development stage biotech assets where the developer wants to de-risk funding requirements while retaining economic participation. There's also strong alignment. PCME is simultaneously our largest shareholder and the licensee. Its primary asset is its OSR Holdings position. This therefore becomes a structural deterrent to non-performance that simply doesn't exist in a conventional out-license to a third-party pharma company. In terms of milestones, $850 million represents the total contingent milestone payments triggered by specific clinical, regulatory, and commercial events over time. Every dollar of that flows directly to OSR Holdings and onto our balance sheet. The clinical milestones begin to trigger as VXM01 completes phase 2 trials. Next, there are two mechanisms that specifically protect OSR Holdings shareholders that I want to highlight. First, the equity pledge. PCME has pledged its entire unencumbered stake, which is around 30% and the controlling position, as collateral for the milestone obligations. So if PCME fails to perform on its obligations, that stake is recoverable. This converts a contractual promise into a tangible, enforceable security interest, which we feel is rare in clinical biotech licensing. Second, the put option. OSR Holdings, at our sole discretion 6 months from signing, can require BCME to purchase up to $15 million of OSR Holdings common stock at $10 per share. That's a significant premium to current market levels, and this signals deep commitment from our largest shareholder to this transaction and to developing VXM01. On royalties, the flow is straightforward. Major pharma pays royalties to BCME. BCME recovers its invested capital plus at most a 15% preferred return, which is the upper limit. And once that's recovered, 100% of all subsequent royalties pass through to OSR Holdings. So shareholders get two separate value levers, the milestone stream and the long-term royalty pass-through. Both flow to the parent level balance sheet. So this slide captures the core difference between this deal and a standard out-license. In a standard deal, the licensee has no stake in you, no skin in the game, and can walk away if their priorities change. However, with this transaction, BCME cannot exit without impairing its own balance sheet. Its primary asset is its OSR Holdings position. So the incentive to perform is more than contractual, it's structural. In terms of a timeline, we can look at it this way. The asset purchase agreement is targeted to close within 30 days of the definitive agreement being signed, with a payment schedule to follow, and will result in the transfer of VXM01 IP to OSR Holdings. The put option becomes exercisable in 6 months from now, whereby OSR Holdings can raise up to $15 million. Over the midterm, BCME is progressing toward an ultimate licensee agreement with a major pharma partner. The first milestone payments we can expect at the end of phase 2 trials in GBM, once that concludes, with at least a predefined minimum efficacy signal. So to summarize the transaction and what this deal involves, we're looking at a phase 2b3 ready asset into high unmet need indications with an oral delivery mechanism. We have up to $850 million in milestones flowing to OSR Holdings' balance sheet. We have a de-risked structure with BCME committed to the long-term development of VXM01 with collateral-backed milestone promises. We have the put option at $10 per share that allows OSR Holdings the opportunity to raise $15 million 6 months from now, and 100% royalty pass-through once BCME's return is recovered. So overall, we believe this is overwhelmingly favorable for OSR Holdings shareholders in the long term. So that explains the transaction, and I'll take any questions from here.
All right. Thank you, Tim. Yes. So how does this transaction differ from a traditional royalty monetization or biotech financing deal?
I think I've already highlighted that in the slides, but what I will say is what makes this transaction unique is the key difference here is who the licensee is. In a standard out license, the third party buys the rights, full stop. But here, BCME is simultaneously our largest shareholder and the licensee, meaning their financial incentive to execute is tied directly to OSR Holdings stock. That changes the risk profile significantly, as the development risks are transferred more toward BCME, but at the same time, OSR Holdings and our shareholders are still able to participate in the upside. As a hub and spoke healthcare company, we aim not just to innovate in our asset and platform development, but also in how we approach the industry. And we believe this transaction is reflective of that.
And beyond the VXM01 transaction, what other value drivers should investors be paying attention to?
Yeah, so in addition to this licensing deal, we continue to develop our other subsidiaries, and we'll disclose publicly when we've made meaningful progress. In particular, we have seen strong partnership momentum in UI.io, our non-invasive blood glucose monitoring platform. We previously disclosed signing an NDA with Sinopharm there, which is China's largest pharmaceutical distributor. We continue to develop this platform, which could be transformative for diabetes management and obviously addresses a large global market. We're also committed to cleaning up our cap table. We recently retired just over $2 million of warrant overhang by rolling it into a $500,000 convertible note with an above-market conversion price. And for us, regaining the $1 share price level, NASDAQ minimum bid compliance is our paramount objective over the coming months. And to that end, we remain very disciplined on share dilution, and we're squarely focused on executing on our objectives to innovate in healthcare and create long-term value for our shareholders. And we think the VXM01 global licensing transaction is a great example of that.
Perfect. Well, thank you, Tim, for this update. We really appreciate it. We have lots more questions for you, so we'll send them to you so you can answer on your own, but we certainly hope to have you back on the platform.
Great. Thank you, Anna.
All right, everyone.